Thank you, everyone. I will call the meeting to order for the Management Committee on November 13th. And we had a special start time that was noticed for 3:15. We've got a short agenda today, so we will start ahead with the agenda. So we've got approval of the agenda. Are there any changes, edits, things like that? All right, seeing no changes, then without objection, the agenda is approved. We do have before us also the approval of the October 23rd draft Management Committee meeting minutes. Everybody's had a chance to review those. Are there any changes, additions, deletions, anything you want to make to those? All right, then I would entertain a motion to approve those draft minutes of October 23rd.
So moved.
Moved by Pacheco, is there a second?
Second.
Seconded by Lee. Any further discussion? Seeing none, all those in favor say aye. Aye. Those opposed, no, and that passes unanimously. So now we are on to our non-consent business, and we have our reports from standing committees, and we have Mark Thompson, our Director of Treasury, with us here again today. And he is bringing forward a list of authorized financial institutions, and this is item 2024-326. So Mark, I'm going to turn it over to you, and thanks for being here.
Thank you, Madam Chair. Yes, I'm Mark Thompson, Treasury Director for the Council, and I'm here to present business item 2024-326, which is the list, 2025 authorized list of authorized financial institutions list. And this business item asks for council approval of the 2025 authorized financial institutions list. The list has also been reviewed by the Investment Advisory Committee as well. The list contains financial institutions that the council expects to use in 2025 to provide banking, investment-related services, and credit card services. It's updated. You can see the changes marked in red. On the item, we bring it forward mostly annually to provide transparency of the council's financial relationships and their associated fees. And also the list serves to obtain statutory and council policy required approvals. Minnesota Statute 473 542 requires the council to officially designate its depositories. And also Minnesota Statute 118A and the council's investment policy require all banks and investment institutions to receive prior approval. This list is separate from any procurement process, and it contains 7 different categories, and I'll quickly walk through them of the different types of financial institutions we project to use in 25. The banking services is the first category, which is our designated depositories, and these are our main banking partners. The card providers and processors are institutions that provide credit card type services to transit, our P-card program, the healthcare benefit programs, and recognition card programs. There's one change in that category. Baker Tilly is being added. They're our new Flex Payment Administrator. And the next category is custodial trust and escrow institutions. These institutions are safekeeping for our investment portfolios, short-term and long-term. These are trusts for our employee healthcare reimbursement accounts and escrow accounts should we need some for bond refundings. Securities broker dealers, those are the institutions that we use to transact for our investment portfolios. They provide us market advice and data, investment products, and facilitate our trading. And then the money market funds, those are the money market funds that we use in association with our investment activities. There's one change there. Principal Global Investors, that's a money fund at our custodian, which is Principal Global, and we use those funds to move cash between our custodian and our bank. So the OPEB Trust has 2 institutions that administer and our OPEB Trust and manage the investments in the trust. And the Certificate of Deposit Program. These are the banks that participate in our CD program. We have 10 active banks currently. This is part of our long-term investment portfolio. And you can see there's 2 changes there. We're eliminating 2 banks that have been on the list for 3 years and have not shown any interest in the program. So we're taking them off, and if they ever come back, we'll revisit that at that time, but just trying to keep it more up to date. A side note on the CD program, if you remember, we added First Independence Bank back in August, I believe. So we now have 10 banks with First Independence Bank and filled the program at 24 million, and we purchased a CD with them in October, so that's a recent change. And this CD program is really our best way with our cash and investments to put money back into the community. And we're excited to partner with First Independence. We've been talking to them for a few years. They're a minority-owned bank in our area that works. They focus on educating low-income and minority communities, enabling home ownership, helping the underserved and underbanked, and provide financial education. So we're excited to have them on the list and be partners going forward. I covered the changes. So on the next page, I've got a chart of fees, and this is just information and being transparent on the fees for the different categories, and I'll just quickly run through those. General banking fees, that's council-wide banking accounts. Those fees for those services are about $81,000 in '24. Those are paid with earnings credits, so we don't actually pay that out in cash. Merchant banking, it's mainly transit, credit card transactions. You can see the volumes. And the fees associated with that are $467,000. Purchasing card program, we actually get a rebate on that program of about $110 is expected this year. Custody services, that's our investment custodian principal that holds our investments for our long-term and short-term portfolios. And we expect fees in '24 to be about $40,000. '25, they'll probably be cut in half because we have a new contract with them with better pricing. Trustee services and escrow services are services we might use if we need an escrow account for a bond refunding, or and actually the trustee services we use for our healthcare reimbursement account. There's about 13 million balance in there. Fees are relatively small. And then the OPEB trust, that's for the administration and management of that trust with annual fees of about $40,000. And so for the Thrive Lens analysis, this list of authorized financial institutions helps the council meet the stewardship outcome of being transparent about its financial relationships and the fees paid to these institutions, and demonstrates our financial resources are being managed wisely. And the proposed action is that the Metropolitan Council approve the list of 2025 authorized financial institutions.
Great.
And that concludes my comments.
Thank
Happy
you.
to answer any questions.
Thank you very much. Are there any questions? Just remind me briefly, when we revisit this list, how do we put the word out again to the banking financial community? And do they solicit to be part of this, or are we? I just can't remember how we, update this list and how we get new people that are on it. Just remind me.
Well, Madam Chair, it's mostly done through the procurement process.
Yeah.
I mean, this is really just a transparency list and to get the approvals that we need for our policies and our statutes. But remember we did an RFP for banking, and then and that has a whole solicitation process that we go out.
Yeah.
That we tried to do something new this year, and same with all these categories. The car providers is a transit that they go through their process to solicit those, and same with the custodians. And the OPEB trust we have a statute that allows us to use this para and SBI
Yeah.
CDs, those are solicited as, the program started about 3 years ago, and there was a solicitation or a mailing out to 100 and some community banks. That's how that started, and then we included it in the banking RFP process that we went through last year, and so as those processes happen, we put them on this list.
Great, so there's several processes taking place depending on what the nature of that financial institution is providing services for. And then I guess where I was kind of going is, we're removing a couple just because they have not, as you said, expressed interest in the program, so we're just removing them. They haven't like pulled back or anything, we're just pulling them off the list.
Oh, right.
Okay.
Yep.
And then, I think that was kind of the gist of it, is just figuring out how, and do all of these have to express interest every time we put out an RFP, or we're coming through whatever various means it is, or can we keep rolling people over, or I should say institutions over year, or is there a set point where we have to kind of scrub and start all over in each of these categories?
Madam Chair, they'll remain on the list as long as we have a contract with them. And
Okay.
if that service is resolicited and it changes, we'll make the change.
Okay, great, awesome. Anything else on that? All right, seeing none, then we do have before us the recommendation to have the Metropolitan Council approve the list of 2025 authorized financial institutions. If there are no other questions, I'd entertain a motion with staff's recommendation.
So
Second. Moved by Pacheco, seconded by Barber. Any other discussions? Seeing none, all those in favor say aye. Aye. And those opposed, no. And that passes unanimously. So thanks, Mark. Appreciate your hard work on that. It's fun to see some of those new ones come on and know how we're doing with, First Independence Bank too. So thank you for your work on that. And now we've got one information item, and it is our quarterly investment review committee report. So turn it back over to you, Mark. And I know Councilmember Pacheco, you chair that committee too, so I'll turn it over to you. Thank you.
Thank you, Madam Chair. Yes, this is an informational item. We do this each quarter to update you on the holdings and performance of the investment portfolios. And I have a handful of slides here as usual, a few on the economy and then a few on our portfolios. And I'll quickly, maybe.
Is there any way we can advance there?
Oh, there it goes.
Thank you.
So a little bit about our economy, the economic growth. This slide shows the the economic growth as measured by GDP over the last year and a half or so. The third quarter came in at 2.8%, which was slightly down from the second quarter, which was at 3%. The economy still is very strong though. That's a pretty strong level. The strength of the consumer is really keeping our GDP at a strong level. GDP spending was up 3.7, exceeding expectations in the third quarter, and another big increase was government spending and business fixed investment. Trade was kind of a drag on the growth during the quarter, as was residential housing, which was down 5%. But overall, the economy still has been strong, and you can see that in the GDP measurement. This is what GDP is measured monthly, and they'll do two revisions. This is what they call the advance release. So, subject to revisions in the next couple of months, we'll hear more adjustments to that, possibly. Inflation. This chart shows inflation over the past, since late 2020. We all know that it peaked at a very high level, but it's been coming down ever since. The Fed's hoping it gets to 2% even. For the third quarter, we ended the CPI, Consumer Price Index, ended at 2.4%. It's been a little bit frustrating for the markets because inflation has really been kind of stalled and going sideways for the past number of months. As you can see there, it's really kind of just stalled. So the Fed is still confident it's under control, And as you know, they've started to reduce interest rates, and I'll show you that too. The September, like I said, CPI came in at 2.4%, which was slightly higher than expected at that time. There's price increases in September in groceries and vehicles and apparel and a number of items that saw increases for the first time in 6 months, so that kind of scared the markets a little bit. We've seen some decreases in energy and housing, which has been a positive, and it was down slightly. The 2.4 is down slightly from the 2.5 the quarter before, and just today we got the October CPI, which came at 2.6%. So again, just kind of moving sideways. Not quite to the Fed's goal yet, but the Fed's certainly confident it's under control. The core CPE, which is a favorite measure from the Fed, was at 2.7 for the third quarter. Stayed the same as the second quarter. Labor markets, this is getting a lot of attention and concern lately. It's been a very volatile index or measurements, and I'll kind of walk you through the left part of the slide here shows the jobs added each month, and you can see July, August were lower, and then there was a big spike in jobs added in September at 254,000, which is a big number. What this slide doesn't show, and which adds to the volatility, was October jobs came out at 12,000, so extremely low. Likely affected by the hurricanes and the Boeing strike, so revisions are likely on that number. But also in October, we saw August and September revised lower by 112,000 jobs. So a little bit of concern about how many jobs are being added each month. Also, there seems to be a decrease in the demand for labor. Employers are hiring less. I'm not looking to hire as many people, so the number of job openings fell to the lowest level in 3 years in September, down to 7.4 million, which was down 400,000. So we're seeing a drop in demand for labor as well. Fewer employees, with fewer job openings, fewer employees are quitting or job hopping, and that's employers have had less pressure to hike wages as well. The employment cost index, which measures the change in employment costs, dropped down to 3.9% from over 5%. So maybe that's good for employers, but it shows kind of a softening job market. The worry is that the softening labor market could lead to less growth and less consumer spending. So employment rate, it had been increasing steadily this year, and we saw a little bit of a dip to 4.1% for the quarter. The average hourly earnings has been increasing or decreasing slowly. We saw a little leveling off towards 4% this last quarter. What happened to the Treasury market this past quarter? You can see this shows the changes in yield. I show this every time. June on the top is a dotted line into the second quarter. You can see rates drop to the solid line on the end of September. That was really just anticipating the Fed cutting rates. The Fed announced in August they were going to start cutting rates in September, and they did. They decreased rates 50 basis points, which is a pretty big move. Typical moves is 25 basis points. So that was the big event kind of the quarter. They also signal that they're going to continue to cut rates, and they were forecasting another 50 basis points this year, which they did. If you might know, they cut rates again last week, another 25 basis points. So if you look at this chart today, the 1 month rate, the very left part of the graph, would be another 25 basis points lower, around 4.5. And then longer term rates actually went up a little bit, so the line would be between these two lines. So interesting change in the yield structure, and we expect more. I think the predictions are that the Fed funds rate will get down to 3.5. So the shape of this yield curve could change dramatically, and also with the election, there's concerns that of which way policies will go and when and what that could mean. I think that some people in the markets are a little afraid that inflation will kick back up and we could see longer term rates jump up a little bit. So I think that's it for that slide. S&P 500, we have exposure to the stock market in our OPEB trust. 62% of our OPEB trust is in an S&P 500 index, and S&P 500 was up 5.8% during the third quarter. Before I walked down here, it was even higher at just under 6,000, 59.85. Continues to go crazy after the election, and it was pretty steady. It was a little bumpy in the third quarter actually. There's some concern over some weaker labor market reports during the quarter, as well as kind of a rotation away from the big tech stocks, with the markets thinking that the AI stocks got a little overvalued. So, but it's been great for our trust. It just keeps going up and up. And I'll show you the results of that in a second. So now I'll jump into the portfolios, the short-term portfolio. This is our, cash management portfolio. It's structured around our cash flow and our big capital, our payroll, debt service, capital expenditures. Very short, conservative portfolio, doesn't change much quarter to quarter. Really just yield shopping amongst a few securities like T-bills, discount notes of the money funds, and it's 1.41 billion at the end of the quarter, and you could see the allocation was very much the same as it has been for the last few quarters. The total return was 1.31% versus its benchmark of 1.34, so very close, almost right on its benchmark. You can see the average yield has dropped a little bit, which is a function of rates being much lower, anticipating the Fed rate cuts that came in September, and we expect that will continue with the Fed continuing to cut rates. This portfolio will see yield reduction right away because this is constantly turning over. So our income and our yields will continue to drop. You can see the interest income was good in the third quarter. It was 18.7 million. And it's been kind of in that $17 million area. So I think it'll hang on for another quarter or so, and then we'll see more significant drop in that. Long-term portfolio, this is our longer-term reserves, 482 million. It's invested differently. It's more variety of securities, although the allocation hasn't changed again from the last quarter, except we added the CD to First Independence Bank. So we added the CD, that bumped the CD allocation up a few million, and we did reinvest. This portfolio turns over much slower, but we did have 15 million come due in the quarter that we reinvested out a little longer in treasuries and agencies and picked up some yields. So that was good to have that happen. Doesn't happen every quarter, but we're trying to roll the portfolio over when we can to higher yields. Third quarter total return was 2.57 versus the benchmark at 351. So we underperformed a little bit because we were quite short of the benchmark, and as rates changed, we didn't get as much price appreciation. But being a buy and hold investor, we're really after the income, so we're our book yield keeps increasing and our interest income keeps increasing, and that's what we're targeting. Of course, when you saw the shape of the yield curve, the higher yields are very short, so we have been very short for a while. We are trying to extend a little bit, so we did buy some longer term securities this time. And then last, I'm going to jump to the OPEB trust. Another great quarter for the trust with that equity exposure that I mentioned. Third quarter total return was 4.57. You can see our 5-year and 10-year averages, 11.6 and 10.38. So doing really well. The portfolio where the trust increased 16.6 million to 380.9 million as of the end of the quarter. Equity is at 62%, fixed income 33%, and our cash pool is 5%, and those are the three investment options we have. We did finish the second quarter with 67% equity, so we moved some money out of there as we try to keep our equity exposure at 60%. But with the equity market, it keeps getting higher and higher. But we do monitor it monthly and make adjustments to try to keep it near 60. So that, and the OPEB liabilities remain fully funded. We monitor that each month too. So strong performance again for the OPEB trust. And that concludes everything I have prepared. I'm happy to answer questions.
Thank you very much. Does anyone have any questions? All right, well, thank you. And there's a lot of interesting things that will happen in our economy in the months and years to come. So this means center stage for quite a while here, seeing how it all plays out for us with our investments and risk and all that.
Things are changing for sure.
That's for sure. Yes. Well, thanks for all your hard work, and we appreciate it. And with that, I have no other items to come before us today. Without objection, the meeting is adjourned. Thanks, everyone.
Thank you.